Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Thursday, October 30th, 2014. We're looking at today's economic calendar. We can see there were several things on tap that we needed to be aware of, but most of these occurred prior to the open of the U.S. trading session. At 7:30, we had the release of advanced gross domestic product data, and it came in higher than expected with a value of 3.5% versus an estimate of 3.1%. We also had the release of the Advanced GDP Price Index, which came in lower at 1.3% versus a forecast of 2.0%. Then at 7:30 we had the release of the weekly unemployment claims, and we can see it was a bit higher with 287,000 new jobless claims being filed versus an estimate of 284,000. Then at 8 o'clock we had Fed Chair Yellen speaking from Washington, D.C., and at 9:30 we had the release of the natural gas storage report, which came out showing that inventories were slightly higher at 87 billion cubic feet versus an estimate of 85 billion cubic feet. Now, as far as today's pre-market sentiment was concerned, things were fairly negative coming into the open. Now, the Asian markets had closed mixed on the end of the U.S. stimulus programs. Investors in Asia were cautious after the Federal Reserve decided to end its quantitative easing 3 program effective this month in October, but did advise that interest rates will remain low for the foreseeable future. We saw that the best performing markets were the Japanese Nikkei. It closed up 0.7 of a point as a weaker yen was helping to drive export shares, and we also saw that the Australian market was up 0.5 of a point on gains in the financial sector. On the flip side, the Hong Kong market was down 0.5 of a point on profit taking after a recent run-up in that market, and the Korean Kospi was down 0.1 of a point after factory output data for September missed estimates. As far as the European markets are concerned, they were open but trending lower after the release of economic data. Now, sentiment was souring in Europe after a report showed that regional inflation has come in lower than expected. We also saw that the banking sector was leading the markets lower as the effects of the European Central Bank stress tests were starting to weigh on shares of key banks. We also think, as a result, the focus for many European investors would be on the Federal Reserve and looking for clues as to when interest might be rising. As far as the United States is concerned, Wall Street did figure to open up lower after the FOMC statement from yesterday. Now, the futures indexes were pointing down coming into the open following the global markets lower and after the Fed decided yesterday to end its quantitative easing stimulus programs. It's also a busy week for third quarter earnings reports as 143 of the 500 S&P 500 companies are expected to report earnings this week, and today's focus would be on ConocoPhillips, MasterCard, Kellogg, and Time Warner Cable. The focus for many U.S. investors would be on third quarter earnings today and tomorrow's consumer sentiment report on what was otherwise a very slow news day for scheduled economic reports. Now, as far as my trading activity is concerned, I attempted 4 entries in the market and I got 2 fills. Both of those were in the E-mini S&P 500 market. But before we look at those trades in any detail, I do need to remind everyone of this following important disclaimer, and that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the E-mini Dow market, and you can see about halfway through the trading session we had several bars moving lower, 1, 2, 3, 4, 5 bars moving lower, followed by 1 bar retracing and a second bar retracing, and I was hoping that I could get the market to come up and give me an entry right here at 16,988, just below the previous day's high. We came within about 6 ticks of giving me my fill before the market pulled away from me, and I had to take that trade out of the market. I also saw an opportunity in the bond market. And once again, right here in about the middle of the trading session, you can see that we had 1, 2, 3 bars moving higher, followed by 1 bar retracing, and I was hoping that this bar here was going to retrace and give me a 2-bar pullback entry long at 141.27 right off the lower Bollinger Band, but no luck there. The market danced away from me, and I had to take that trade out of the market. That brings me to the E-mini S&P 500 market, and this is where we had 2 attempts, and both of these were fills. Now we can see here, let me go ahead and tighten this up. There we go. We can see here that shortly after the open of the trading session, we had 2 bars moving higher, followed by 1 bar retracing and a second bar retracing, and this gave me a long entry here at 1973.5. Now I like this entry a lot because you could see I had protection between my entry and my stop loss in the form of the main pivot point. I got my fill, the market moved about a tick in my direction and then quickly moved against me below the main pivot point and never really recovered. When it went to within 1 tick of my stop loss, I ended up moving my profit target to break even. I was hoping to get out with a scratch trade. The market actually bounced up and kissed me a couple of times right here without filling me, and then dropped down and knocked me out here for a 4-tick loss. So that put me down 4 ticks or $50 per contract traded. Now staying with the E-mini S&P 500, you can see we had 1, 2, 3, 4, 5 bars moving lower, followed by 2 bars retracing, and this gave me a short entry opportunity here at 1972.5, right below the main pivot point. Once again, I really like this entry because I had protection between my entry and my stop loss in the form of the main pivot point. And on this particular trade, what happened here, the market kind of danced around a little bit here, and then when it moved 3 points and 3 ticks in my direction, I then moved my stop loss to break even. The market then went to my full profit target a couple times. I had a 3-tick trailing stop, but it didn't fill me at my profit. It came back and knocked me out here for just a 1-tick win, which gave me $12.50 per contract traded. And so from that perspective, just to recap, folks, we had 4 attempts in the market. I had 2 fills. Both of them were in the E-mini S&P. I had a $50 losing trade and a $12.50 winning trade, so I ended the trading session down $37.50, and looking forward to seeing what kind of opportunities might present themselves tomorrow. Well, looking at tomorrow's economic calendar, you can see there are several things on tap that we need to be aware of. Things get kicked off at 7:30 in the morning with the release of the Core Personal Consumption Expenditure Price Index data. Then we have Employment Cost Index information, personal spending, and personal income data. Then at 8:45, or about 15 minutes after the markets open, we have the release of the Chicago PMI data, and then that's followed quickly at 8:55 by the release of the revised University of Michigan Consumer Sentiment. So what I'm hoping that tomorrow, either individually or collectively, these reports are going to give us some bounce and volatility in the market that we can take advantage of. And with that, I'd like to thank you all for watching today's daily video. I wish you a pleasant evening. I look forward to speaking to you tomorrow. Take care and good night.